Okay, it is July 16, 2026. I'm making another video. Now, I've not made a video in 3 weeks, I believe. I was on vacation and I didn't feel like making a video without my mic. So, I made some posts or some two screenshots of two trades in the post section of the channel just to stay somewhat active. But as you see on the screen right now is the Renko way of, Renko is the style of chart pattern. This is an old chart pattern from the 1700s, I believe. And now the typical one, this one, the point and figure, is what they would use in Wall Street in the Twin Towers at the time when some family members used to work there. And I'll show this because you could use this obviously to make these same exact trades, but I like to use, obviously you have your typical candles, but Renko is I really like Renko because Renko eliminates all the noise, all the huge spikes, all the huge wicks, extra nonsense. Well, as you see, I drew up, we have a V bottom, W bottom, whatever you want to call it, same thing if you want to add the extra leg for W bottom. But pretty much price dumps is the same as I've shown in the other videos, whether it's candlesticks or Renko or point and figure or even the line chart. It doesn't even matter. It's still Stacey Burke teachings as far as the market always does pumps up coils and dumps down, or it dumps down coils and pumps back up depending on the setup. Look at this V bottom, W bottom, whatever you want to, like I said, whatever you want to call it. We have another one here. We have our head and shoulders. Once again, a pump, coil, and the dump down. Now this hit TP. When I go to the candlesticks, now I have to, well, I might, because you can't be in replay mode using Renko. And I don't know if my computer wants to lag or not today when I switch, so I may not do it. But you can check yourself. This is at 52,397.3. You can check. Anyways, so we had our head and shoulders price broke under in this candlestick, and therefore for me that was entry to this low, which was the open, the 930 open, 2.6 to 1, or 1 to 2.6, however people say. I always say 2.6 to 1. That might be backwards. Anyways, stop loss I had at the high, since I knew I could have, usually it's a 2 brick stop. Usually call them bricks in Renko. So in that case, it'd be, well, let's see, I entered on this one, so it would be back here. Well, it's halfway, so it could be like here or here, whatever the case. Anyways, cool. That was Tuesday. Wednesday, another M formation up top, or the A top, as you could say as well. In the timing window now, because these is 10 o'clock, so I'm looking for 10 a.m. reversals. Are we at the high of the day, or are we at the low of the day? Are we at the low of the day for a buy low setup, or are we at the high of the day for a sell high to low of the day? Now this one to the low of the day, London was our low on Wednesday, and the price came all the way down and hit. In this trade, entry was, so we came up, down, up, M top, A top, broke under, and I'll just put the dotted line on it right here. 10:45 entry. I'll bring it down so you guys can see without me hovering over the short positions. Right here, if you just go up, 10:45 was the entry, and the stop was at the high for 750 pip or 75 ticks, whatever, futures or CFD, all the way down to New York session lows. So on the candlesticks, the low was here on the candlesticks, I'm pretty sure. So there were multiple positions based on one of these positions up here was based off the line chart, seeing an M formation on the line chart on the 1 minute, I believe, or the 3 minute for the entry for the 9-to-1 entry up top. This one, the 6.6, was because of Renko, as I just stated, the M or the A formation up top for the sell-off. This formation was based on the point and figure. I'll show you the point and figure for the Thursday trade. Alright, let's go to Thursday because that's it for this one. Well, Wednesday, first TP would be New York session low, of course, in session, so high of session to low of session. That's first TP. Second TP is low of day, and low of day happened to be near our half level at 42,500 flat. Thursday's trade, which is today, we had our W bottom, V bottom, and the time window is 10 o'clock. And price made the V bottom, made the W bottom, came up past our consolidation point. When you go on, obviously you can't see it because Renko takes out all noise, but on the candlesticks or even on the lines you can somewhat see. I mean, you can see it, but candlesticks primarily, you will see. Obviously, it was a dump down consolidation, come up, we push. That's a breakup structure, right? If you want to talk about price action, and the buys up. My stops were behind the candlestick for a 380 pip, 38 ticks stop loss, and TP was the high of day. There was a wick here for the open on the candlestick that shot all the way up to Monday's high, the opening range high, the high of the week, well, high of the range for the week. So that's why TP was up here, even though, as you can see on Renko, it would have New York sessions high was 875 instead of 900 flat. So that's one thing about this. You would have to go after, obviously, you find your pattern, 10 a.m., you hop in, you place your stop loss, and then the TP, you would switch the candlestick so you could see where your TP is, and then you would adjust. You would come back to Renko, adjust TP and set. That would be the only thing. Honestly, you just want to stick to Renko, but I would still advise to go to the candlesticks for TP, just because also when you're marking your charts with the opening range high, the opening range low, the initial balance low, which is the Tuesday low, initial balance high, Tuesday high, previous weekly, your monthly levels, of course, your Friday closing price, your Monday closing price, just because on Renko you can't see the wicks if they were to go up higher. So now that's the high of the range, so that'd be the only thing. Other than that, let's go to SP. Okay, so SP. Okay, so the 1 minute's looking like this just because there's barely any volume and it's at 1 pip or 1 tick per break. So that means price just has to go 1. You can see it here. So we were at 529, and now 528 is the current. So if it stays here, there'll be another break at 528.0. It'll be flat. It'll make another break. it changes based on the volatility of the market. So obviously right now we're into, I think we're in Sydney session, 7 o'clock. So here we go. See, it ended 528.0. So now we have to be at 527.0 to make another break. So that's why it's during New York session. I think SP is 2.5, so 250 or 25 pips, 25 ticks. But anyways, let me. I'm about to go to the 3 so you guys can see it. Okay, yeah. Here we go. So New York session was the low of the day. We're at the low. So like before, we're at the high. So I'm looking for a sell high setup. We're at the low or a buy low setup. How convenient. We're buy low. New York session, 10 a.m. and we got a half low, 75.50. So you have 3 reasons why. Okay, we're looking for buys. Okay, now. And look at that, our quarter level, 750, 75, 70, 75, 75. Okay, let me go back to the 1 so you can see the trade. Okay. So, at the time, this was not like this at the time, where we have multiple V bottoms. Or as you can see it say peak lows, a lot of peak lows. So peak lows would be the point that is pointing down are our, oh my goodness, peak lows. And then I'm not trying to do all that. The one here and one here. So that's 4 peak lows, right? If we have a peak low, we're looking for the buy. So if we have a peak low, we're coming up. If we have a peak high, then coming down, you're rejecting the peak formation. Anyways, it did not look like this at the time because, like I said, low volatility. So now it's 1 tick per brick. At the time, it was 25 or 2.5, so 25. So this was just. It looked like this. Oh, it looked just like this. It was literally. This is exactly what it looked like at the time during the session. So it changes obviously because now it's 1, it's not 2.5. So anyways, nonetheless, W bottom, V bottom, whatever, same thing. Peak low, peak low, peak low, peak low. We break the consolidation. Right here, entry. Candlestick ends above entry. Stops. At the time, once again, it wasn't 1, 2, 3, 4, 5, 6 bricks. It was 2, I think, at the time. I believe it was only 2 of them. So that's why the stops, 50 pip, 5-point stop, whatever. Tick, I don't know. I'll just call them pips because this is CFDs. And then this entry as well because price was just going. So I was like, oh my goodness, I gotta get in. So that was that one. At the time, New York session high was right here at the time. It was a little bit with the wick or the candlesticks, of course. Can't see that on Renko. And then obviously this one, I think was this TP was previous day close on the candlesticks. I think. I don't remember what on the candlesticks what it was. Let me check. Let's see. Let's go on candlestick. Oh, Monday, near Monday's Monday and Tuesday's high. Let me go here. So you see how it's you go on the one so you can see it more clear. Okay, so we have our W, V bottom, but you see all these extra wicks. Some people might be like, oh, and get a little anxious or a little whatever. So now when I'll switch back to Renko. Like, look at this. Like, come on, man. Now, I said I was going to show you point and figure. So now look at point and figure compared to this. It might look different once again because the volatility is down. But hopefully it'll show it. Let me see. Okay, so point and figure. Now, this looks mad crazy, but before those computers and stuff, this is how they used to do it. Now, X's obviously means prices coming up. X's or O's means going down like tic-tac-toe. But the trap and shift formation is what you're looking for, which is the trap and shift is, once again, that's the trap and shift for the buy, and this is the trap and shift for the sell. Now look at this and look at this. Down, up, down, break above, enter. Stops is usually 3 or 4 X's back for the stop loss, if I'm not mistaken. Or you can have it at the low, but I'm pretty sure it's 3 or 4 X's at the low for stop loss. Now for the sell. No, look at this once again. Boom. Down, up, break the area with the close of this circle. Now entry. So 1, 2, 3, 4. Stop loss, TP, low of day, low of session. It's the exact same thing, except you're not seeing all those huge wicks, all the extra stuff. So this is another way you can do it. But once again, it's still based on Stacey Burke trading. Let me go back to the Renko. Those were the trades. Tomorrow is Friday, so we'll see if we catch, I don't want to say catch, if we see another pattern for a 10 a.m. club reversal. If not, we're done for the week and back to it on Monday. That's the video.